Welcome everyone, this is our case study presentation, and through this case study we would like to use the financial services of a retail bank to compare the different approaches and their strengths and weaknesses. Virtue ethics is currently one of the three major approaches in normative ethics. It may initially be identified as the one that emphasizes virtues or moral character in contrast to the approach that emphasizes duties or rules, deontology, or that emphasizes consequences or actions. In West, the founding fathers of the virtue ethics are Plato and Aristotle, and in the East it can be traced back to Mencius and Confucius. It persisted as the dominant approach in the Western moral philosophy until at least the Enlightenment. Suppose it is obvious that someone in need should be helped. A utilitarian will point to the fact that consequences of doing so will maximize well-being. Meanwhile, a deontologist to the fact that, in doing so, the agent will be acting in accordance with the moral rule, such as do unto others as you would be done by. Finally, virtue ethicist to the fact that helping the person would be charitable or benevolent. An example for a financial product for retail banks following the virtue ethics approach is free access to financial advice for everyone. Normally, customers have to pay for financial advice from banks. This will not lead to morally right actions for the retail banks, because the retail bank also will benefit from customers knowing their financial position and what they can learn from the bank. Following this example, retail banks should provide financial advices for free following the virtue ethics approach to perform morally right actions. Another example for a retail bank with a virtue ethics approach is to lend money at a discount to a firm that is having trouble with obtaining the money. This example leads to a morally right action due to the cheaper lending provided to expand the great ideas of the corporation. This shows the morality of the retail bank. As we have learned, there are three major ethical approaches, namely the deontological approach, the virtue ethic approach, and the utilitarianism approach. When we focus on the distinction of virtue ethics compared to the other two, there is one major difference. Virtue ethics does not just include virtues in the judgment when deciding whether the actions can be considered as universal law, the ontological approach, or whether the actions can have benevolent consequences, utilitarianism. Rather, virtue ethics take virtues as the main point from which the judgment for morally correct actions are made. Therefore, virtue ethics is considered to be between the other two ethical approaches. For example, merely looking from an ontological point of view, we cannot say that free advice and discount lending is morally correct, since the money lent can be used for wrong purposes and can therefore never become a universal law. Similarly, by looking merely from the utilitarianist standpoint, free advice and discount lending would not be by definition ethical, since discount lending could result in banks going bankrupt, which would negatively affect others. Arguably, the most reason-based approach to decide right and wrong. It holds that the most ethical choice is the one that will lead to the greatest good for the greatest number. Because we are unable to predict the future, it is complex to know with certainty whether the consequences of our action will be good or bad. It also has trouble accounting for values such as justice and individual rights. For example, assume a hospital that has 4 patients whose life depends upon receiving different organ transplants. If a healthy person walks into the hospital, his organs could be used to save 4 lives at the expense of his own. This would, arguably, produce the greatest good for the greatest number. But a few would consider it as an acceptable course of action, let alone the most ethical one. The main strengths of the deontology are the following. It is easy to apply, as it just requires that people follow the rules and do their duty. This approach also tends to fit well with our natural intuition about what is or what isn't ethical. Unlike utilitarianism, which judges actions by their rules, deontology doesn't require weighting the cost and benefits of a situation. Despite its strengths, only following deontology can produce results that many people find unacceptable. It also means disregarding the possible consequences of actions when determining what is right and what is wrong. For example, suppose you are a software engineer and learn that a nuclear missile is about to strike your city. You can hack the network and cancel the launch, but it's against the professional code of ethics to do so, as it is a form of lying and cheating. However, thousands of lives could be saved. The utilitarianism declares that the foundation of moral is utility, or the greatest happiness principle, and contends that actions are right because they tend to maximize happiness or profit per return in financial sector. For example, the banks offer credit cards to their clients with their own names. In the financial sector, a deontological ethic is reflected in the regulations that ensures the protection of rights, duties, and justice by the central banks, regulators, and the sector itself. These may be rules operating within banks. For example, the banks set up clear credit limits for different groups of consumer loans. Utilitarianism helps banks to maximize their utilities in the world of returns. This may generate the best possible overall outcomes. This can also serve as a justification for most of banking products, because the conventional wisdom in banks is that the more of these products they can sell, the happier the customer will be, the more profit the bank can make. However, the weakness is also obvious. Even if one has a good motive to bring utility to another person, there could be circumstances that an act with a move to bring happiness to another is unethical. To take an example, a young teenager in school may be very happy to receive a credit card in his own name so he can buy desirable consumer items, but if he has no job or no income, he may be unable to repay his debt. This becomes unethical. From a deontological perspective, such rules codify the duty of agents not to pursue courses of action, such as, for example, taking extensive risk, that violates the right of others, such as their creditors. However, deontology, as an institutional in financial regulation, failed as a moral guide in the financial sector. It is not merely the amount of regulation that matters, but the quality of them. Retail banking regulations should be regarded as just or fair and hence universally supported through the sector. For example, the excessive liberalization allows some bank managers to take risks that undermine the right of clients. The rules fail to control these players. A virtue is an excellent trait of character. Virtue ethics approach might give retail banks more possibility to help those who are really in need. The virtue ethic-based financial products provided by banks reveal that the banks are charitable. However, the shortcoming is also apparent. Combined with the example stated in the previous slides, as a reminder, the free financial advice or cheap loans for startups, the banks might follow irrational rules, take extensive risk, and obtain less utilities, or in other words, returns.